Hi, and welcome to what I hope is going to be the most complete market update for what happened in the Ottawa real estate world in 2025. Now, I say that with some degree of confidence because I spent several hours over the holidays downloading manual data from the Ottawa MLS, putting it into different charts to tell a bit of a different story than you're going to see from the Ottawa Real Estate Board monthly update. Now, there's nothing wrong with looking at the Ottawa Real Estate Board monthly update. I look at it every month and it provides a lot of useful kind of headline information as to what's happening in the real estate market. But I think to get the full story as to what happened in 2025 and what that's going to mean for you if you're considering buying or selling in 2026, you need to drill down into the individual property types, and that's what I tried to do in the following slides. So I hope you find it helpful. Now, one thing it's not super practical to do, I wish I could do it, but we'd be here for an hour, is get into what the major micro markets in Ottawa are doing. We're going to look at what's happening with each different property type, but we're still going to be looking at the Ottawa market in general. So what I'm going to do to compensate for that is over the next week or two, I'm going to be releasing other market updates for Kanata, Barrhaven, and Orleans to start. So get subscribed or stay tuned if that's something that you're interested in, a micro market update for your location. If you want an update on a market that isn't mentioned, you can also just reach out and I'll get you that information if you need it. Now, this particular market update is also done in collaboration with a bunch of other agents that I know and work with throughout Canada. So if you're interested in finding out what's going on in other places like Vancouver, Toronto, or anywhere in between, I'm going to link several of their market updates in the description below so you have a good idea of where to go if you want good information on those cities. Now, without further ado, let's get into the numbers themselves. So we're going to start by looking at the total number of new listings. Now, this is for the entire city of Ottawa in 2025. And one thing I want to mention about this statistic right off the bat is there is some double counting happening in here. Total new listings indicates all of the listings that hit the market on the MLS in 2025, but that unfortunately includes properties that were canceled and then immediately relisted, which is a really common practice for somebody who's looking to drop their price. There's no way to back these numbers out, so I would say in reality we're probably closer to somewhere like 17, maybe 18,000 new listings. So just keep that in mind when we're comparing it to the next slide, which is the total number of sales, 11,679 approximately. Now, what these two numbers tell us is that just over half of the properties that were listed in 2025 are actually selling. There were a lot of properties that came to market this year that didn't end up selling at all. And this is reflective of sellers kind of coming to the realization that, or not coming to the realization, that they need to price their properties lower. The people who adapted were able to sell. The people who didn't and were waiting for that strong price from a few years ago to come back ended up ultimately frustrated and came off the market or are still sitting on the market right now. Now, getting into the sales volume numbers, we're going to look at the freehold homes sales volume first. Now, this is any property basically that does not have a condo fee. And we can see here that compared to the 5-year average, which is the orange dashed line here, the 2025 numbers underperformed for the first few months, but then actually started to beat those numbers in May of 2025 and beat them pretty much for the rest of the year. Now, one thing that might explain this is 2021 and 2022 are both included in the 5-year average. And if you remember in 2022, that's when interest rates started to go up around the spring. So January, February, March were absolute record years in 2022, unseasonably so. And then interest rates started to go up pretty sharply. Sales fell off a cliff, and that's being factored into that orange line. But still pretty good. Like, I was surprised that 2025 freeholds outperformed the 5-year average for as many months as they did. Now, if we contrast that to what happened in the condo market, you can see here that the 5-year average outperformed the condo market in 2025 pretty consistently throughout the year. And this shouldn't be a surprise if you've been paying attention to either my market updates or anybody else's for the duration of the year. Condos didn't do well, and they continued to not do well up until the end of 2025. Now, this is an interesting one to look at. It's not one that I show every month when I'm doing my updates, but I think it's interesting to look at it at least once a year to get an idea of kind of what the general profile of the Ottawa market is. Because Ottawa is very different than cities like Vancouver and Toronto, even though it's the nation's capital. And the most significant way in which it differs is how much of the market is still made up of detached, semi-detached, and townhouse properties. Despite the focus on intensification, and it'll be interesting to see if these numbers change at all as we see more intensification, because that's the goal of the bylaws, or the zoning bylaws that have been coming out over the last couple of years. But we're still very much an urban sprawl, kind of suburban community where most people live in a house rather than an apartment condo. We do have a significant amount of condo townhouses as well. You see those in pretty much any suburb, as well as a fair few of them downtown. And this other number, by the way, just includes anything from, there's a bit of vacant land in there. Also, multi-unit properties would be counted there as well. Now, I find it's really interesting to keep these numbers in mind when we're looking at the next slide, because it gives you a good idea of what the typical property in Ottawa really looks like. So the typical property from what we know so far is probably a detached or a townhouse freehold property. And this is the same data broken out by price point. So we can see here, it's probably also between $500,000 and $800,000 or $900,000, depending on the area and the size. We've got a fair few here, anywhere from under $300K up to $500K. Now, this is primarily going to be the apartment condos as well as townhouse condos, which typically have a lower selling price than the freehold ones, obviously. And then we've got a bunch of big detached, kind of over $1 million. So we see those anywhere from the big ones in the suburbs to reasonably sized houses that are more downtown, places like the Glebe and Westboro. It's not hard to get a house over the valuation of $1 million in those parts of town. Now, this is one of my favorite slides to look at, and what I've done here is I've broken down months of inventory, not just by condo versus freehold, but by individual property type. And this got really interesting because what I think it highlighted the most was just how badly apartment condos are doing, even when compared to townhouses, which also have a condo fee. Now, condos in general, townhouse condos and apartment condos are normally mushed together, and those numbers are tracked as one, and then it's compared to freehold properties, which is the other three here. But I think it's important to break it out and see that the townhouse condos are actually performing about the same as detached properties. They almost kept up with townhouses as well. And by the end of the year in December, which December is kind of a weird month because of the small sample sizes, but townhouse condos were actually outperforming detached properties. Now, what I should probably explain in order for that to make sense is months of inventory. When we're looking at months of inventory, the lower the number, the better that market is doing, or the hotter that market is. Because what months of inventory is, for anyone who hasn't been paying attention to the channel, is what we get when we take the number of properties that are on the market at the end of the month and divide it by the rate at which properties sold in that same period. And what we get is a measure of absorption that's called months of inventory. So it basically answers the hypothetical of, if we were to sell every single property that was left on the market at the end of the month at the same rate that properties sold in that same period, that's how long it would take for us to completely run out of properties. So a high months of inventory, like what we're seeing here for apartment condos, we can see they went up very sharply throughout the year and ended up about over 8 months of inventory. That's a very slow market. And these dashed lines here, what they mean is buyer's market, balanced market, and seller's market. So buyer's market is anything over 6 months. Balanced market is anything between 4 and 6. And a seller's market technically is anything under 4. Although once you get up above 3, you're probably it's going to feel more like a balanced market because it's probably transitioning one way or the other. But what I felt was really interesting was just how well the townhouse condos hung in there when compared to the freehold properties, because typically we think of apartment condos and townhouse condos as kind of a similar beast, but they're actually not. And you can see just how different they are and how poorly the apartment condos are doing in comparison to the townhouse condos. Another one that I like to look at is list to sales price ratio. So this is what list to sales price ratios did for the entire year of 2025. And this is basically based on the list price that the property was listed at, how far above or below that price did it sell. Now, another thing to note about this statistic is this is based on the final list price. So if they listed a property at $650,000, price dropped it to $650,000, price dropped it to $550,000, and then it sold for $525,000, the sale to list price ratio is going to be how that $525,000 compares to the $550,000. The final list price. So it doesn't take into consideration the entire pricing history of the listing, which is unfortunate. It would be more useful to see kind of what the sale price was in comparison to the original list price, but the stats just don't shake out that way. But what we can see here is that 98% was what the average sale to list price ratio was at the beginning of the year. Went up to 99 throughout the busier part of the market, kind of February, March, all the way up to June. Went back down to 98 for the rest of the year. Still pretty strong overall. For condominiums, started at 98 as well, stayed there for most of the year, dropped to 97% in the summer, back up to 98 in September, and then back down to 97 for the remainder of the year. So again, this is not taking into consideration all the price drops that happen, and particularly for the condo market, I would have anticipated the sale to list price ratio to be a little bit lower. So a part of that story is probably the number of price drops that had to happen in the condominium market. And now finally, we're going to look at what prices did. Now the home price index, which gives us the benchmark price, which I think is better than the average sale price because it controls for outliers, is broken out by single family homes, townhouses, both freehold and condo, and apartments. So that's what we're going to look at here. And we can see overall in 2024 for single family homes, we saw a 1.1% decrease. We started at 690, finished, a 1.1% increase. We started at 690 and we ended at 697.7 after peaking pretty high in June at 725. Townhomes, we're looking at things quite a bit differently. We see that it started up here at 569, went up in February to 580, and then pretty consistently fell throughout the year to 548. Now, what I think is interesting to note here is that the number of townhouse sales and the months of inventory was actually really good compared to detached. So it was interesting to see that the average price sold. And what that kind of tells me, my kind of speculation, is people who own townhouses were a little more in touch with the market, a little more willing to let go of a little bit of that equity and accept a lower price. Because more of those sales happened. And as a result of them being more willing to accept lower prices, the average sale price went down, or the benchmark sales price went down. And back to apartment condos, we saw that there were, again, quite a low amount of apartment condo sales that happened. We saw a 2.27 decrease in the average sale price for apartment condos. It actually wasn't as bad as I thought we were going to see. But yeah, we saw that the number of sales that happened was quite low, and the prices went down as well. And honestly, this is the only section of the market where, like, I'm not sure what's going to happen with detached properties and townhouse condos. But for apartment condos, I can say with a fair degree of confidence, unless something big changes, with how high that months of inventory was, the demand is just not there and the supply is building up. I would expect prices for apartment condos to continue to go down into 2026. So if you're considering selling an apartment condo, it may not be worth waiting for the spring market. You might want to get on the market now, start competing now, because I don't think prices are going to go up even when the spring market does get here. If you're considering listing a freehold property, I think that might not be the case. I think there's a chance that prices could go up a little bit, but we'll see whether or not that actually happens. There's a lot going on in the world right now that could affect whether or not that's going to be the case. Thank you so much for taking the time to watch the market update. If you ever have any questions, don't ever hesitate to reach out. Wishing you all the best heading into 2026, and we'll see you next month. Take care.